Welcome everyone, and good morning, good afternoon, or good evening, depending on where you are. Welcome and thank you for joining us today. As you know, we are here to launch the yearly edition of the ICAP ETS status report. As always, we are planning to use the launch of the report as an excuse to have a bit of a conversation on where we are at with the implementation of emission trading systems globally, and we will also have a closer look with to some of the systems together with the panelists that are joining us today. And we will get to that. We will get to all of that in a second. I would like to give it a few more seconds as participants are still coming in, but we will dive right into the presentation in a few minutes. In the meantime, I would like to remind you of some housekeeping rules. What we would like to do today is to keep the conversation as dynamic as possible, and we are quite keen to give quite a lot of space to the audience to ask questions, make comments, or raise anything that you would like to raise. So after we are done with the presentation of the report, and after we are done with the panel discussion, we'll come to questions and comments from the audience. You can already put in questions and comments throughout the presentation. Make use of the Q&A function of the webinar, and we'll be starting to come to those right after the panel discussion. With that, I think we have a critical mass, and even though people are still ticking in, I think we can get started. I would like to go to Genevieve first. Genevieve Benoit from the government of Quebec, who is serving as the ICAP co-chair at the moment, for a quick welcome and introduction, and then I will be telling you a few more information about the run of show for today's webinar. With that, Genevieve, the floor is yours, and please kick us off.
Thank you, Stefano. Welcome, everyone. Good morning, good afternoon, good evening, depending where you are in the world. It is really my pleasure to welcome you to the launch of this 12th edition of the ICAP status report on emission trading scheme. I'm excited to read the latest report, honestly, every year. Looking at the attendance today, there's more than 100 people on the line. I guess I'm not the only one. In my perspective, the ICAP annual report is probably the most comprehensive and reliable source of information on ETSs worldwide. I'd really like to take a moment to sincerely thank the ICAP team for this awesome work they're doing on an annual basis. It is really a reference for me. We have some great panelists today from the EU Commission, the United Kingdom, California, Brazil, the World Bank, who will share with all of us the latest development and future prospect on ETSs. We will also have a presentation from the ICAP Secretariat, who will run us through the finding of this 2025 ETS status report. With that, once again, welcome. I will leave you back in good hands with Stefano, who will be moderating this session today. Thank you. Have a wonderful day, everyone.
Thank you, Genevieve, and let's dive right into it. So if we could get the slides back up, I'll first spend a very quick word to present ICAP to those of you that don't know it, and also explain why we do this in the first place. So those of you that are not familiar with ICAP, ICAP stands for the International Carbon Action Partnership, and we are an international forum that brings together more than 40 governments to jointly work on the development and implementation of emission trading systems. So as a government-to-government partnership on emission trading systems, we have a few different roles, including facilitating dialogue among ICAP members and other jurisdictions on key aspects related to ETS design and implementation. We also do a fair amount of capacity building work to build capacity for the implementation of new emission trading systems. And we also have a mandate to do knowledge sharing on all aspects related to ETS design and implementation. So we typically develop knowledge products and tools to disseminate information on ETSs as policy tools, and the status report, which we're launching today in its latest edition, is probably our flagship publication, and as Jean-Yves was saying, one of the key resources for the carbon pricing communities globally. Again, we are not just here to launch and present the report, but we want to use this as an opportunity to have a discussion about where we are at with the implementation of ETSs globally. What are the key trends and developments that we witness over the last few years, and what might be coming next. So if we go on to the next slide, what we will be doing today is that very soon, in a few seconds, we'll be done with the welcome and introduction. We will then be able to dive right into the presentation of the key highlights from the ICAP status report 2025. I'll be giving a few words describing what we think are the main findings and the main trends in the ETS space right now. I will be then giving the floor to my colleague Irina and my colleague Victor to dive a bit deeper into some of these aspects. And after that, we will go into a panel discussion with a few panelists from key organizations and key governments that are at the forefront of ETS implementation globally. So with them, we'll be talking about some of the key trends in their jurisdictions, or the key trends that they are observing from their point of view. And again, we'll be diving a bit deeper into the substance. After that, we'll make sure to leave plenty of time for Q&A with the audience. So again, don't hesitate to put any comment, question, or anything that you would like to raise in the Q&A function of the webinar, and we'll come to that right after the an initial panel discussion. Again, I also wanted to say that the ICAP status report is probably the biggest undertaking for the ICAP team in the year. It is a very valuable resource, but also something that the team puts a lot of time and effort into it. So I wanted to, similar to what Jean-Yves already did, I wanted to acknowledge the ICAP team and the hard work that they did on the report, and also the help that we receive from ICAP members, ICAP observers, and ETS jurisdictions around the world in helping us with compiling the report, verifying information, and making sure that the ICAP status report remains the key resource on ETS development globally. Again, this wouldn't be possible without obviously the hard work of the ICAP team, but also the long-standing support from ICAP members, observers, and all the other jurisdictions that we work with. With that, I think we can start diving right into it. So if you go on to the next slide, I will be getting into the key highlights from the ICAP status report, and I will then give the floor to Irina and Victor. On to the next slide. If we look at, first of all, if you look at what is there and what we are presenting today, again, the ICAP status report, it is our flagship publication. Also, just to be clear and to make sure that we are all on the same page, reflecting the mandate of ICAP, it mainly focuses on compliance emission trading systems. So we really focus on emission trading systems that are mandatory and compliance in nature. We obviously work really closely with other organizations and other publications that look at the carbon pricing spectrum more broadly. In this vein, for example, we have a long-standing cooperation with the World Bank on their state and trends of carbon pricing report. But when it comes to our status report, we keep a focus on compliance emission trading systems specifically. In terms of what you will find in the report, also mirroring the structure of previous reports, you will find a foreword from the ICAP co-chairs that set the tone for this year's status report. There's also an executive summary that looks at and tries to distill what the key trends and outlook for emission trading globally is. As always, we try to also condense the key data and information into infographics that are visually easy to understand and easy to navigate as a way to, again, let the broader public understand what are the key trends related to ETS design and implementation globally. And then obviously you get to the substance of the report, which are detailed fact sheets for all of the emission trading systems currently in force, under development and under consideration worldwide, and reflecting the increasing uptake of emission trading systems, which I will describe in a second. In the report this year, we'll find 58 fact sheets on specific systems and specific jurisdictions. Without further ado, I think we can dive into the substance of it. And let's start from what are the key trends and outlooks that we observe in the space. So first of all, it's no secret to anyone, but the momentum for ETS design and implementation continues. I mean, there are challenges which we'll get to in a second, but we are still at a time when ETSs are on the rise, and there is an ongoing momentum to develop new systems, but also to refine existing ones. Again, over the last decade, the emission trading systems that are in operation in the world more than doubled, more both in terms of the numbers of systems that we have implemented around the world, but also in terms of the emissions that are covered within those systems. And again, we are coming from an extended periods of great momentum for ETS uptake. Which means that new ETSs are being developed and launched worldwide. We had, a markup in the numbers of systems in operation every year compared to last year. This year we have 2 additional systems that came in force, and we'll get to that later on in the presentation. What is also quite important and worth noting is that most of the growth and the uptake in ETSs globally is coming from key emerging economies and developing countries, and especially looking at G20 countries, we are seeing an increasing momentum for the implementation of ETSs, and we have countries such as India, Brazil, and Turkey that are actively working on the implementation of emission trading systems. We also have key G20's economies such as Indonesia and China that have recently launched emission trading systems and are now in the process of refining them. So we are seeing an increasing level of activity in key emerging economies, and these countries are really at the forefront of the next generation of emission trading systems. That in turn also means that we are seeing innovative system designs emerging, as well as we are also seeing that the use of offset credits and more in general combining different forms of carbon pricing in a single carbon pricing policy mix is becoming of increased popularity, and often offsetting protocols and the use of offsetting credits as a compliance options is really at the core of the design of the next generation of emission trading systems. Again, we all know that there's no single blueprint for how to implement an emission trading system, but this increased uptake is also coming with an increasing diversity in the system design. I mean, again, this has to do, for example, with the development of hybrid system and with the development of intensity-based systems, which, as we will see later on, are on the rise, and they're really shaping what the next generation of emission trading systems will look like. That again is coupled with an increased focus on the use of offsets, but we will get to that later in the presentation. At the same time, established emission trading systems are also constantly evolving. On one side, one of the key trends that we have witnessed over the last few years in many different systems is a focus on the expansion of the scope of many emission trading systems, either beyond the sectors initially covered. This is what is happening in China, for example, or beyond the core group of sectors that are typically covered in emission trading systems. And we are seeing that there are a number of systems that are trying to bring in new sectors that are typically not covered yet by emission trading systems globally. And this is something really interesting to witness and see. At the same time, one discussion that is coming up on the radar of more and more jurisdictions is around the future of these systems. It's around understanding what role these systems will play in decarbonization and in the achievement of net zero targets. To a large extent, that discussion also has to do with understanding what role removal credits have in these systems. But there's obviously much more to the picture than just the inclusion of removals in emission trading systems. But what we're seeing is an increased attention and an increased policy debate and public debate around what emission trading systems will look like in the future, and how they might evolve to possibly fulfill a slightly different role in the future. We actually had quite an extensive discussion on that a couple of weeks ago, when ICAP launched a report entitled ETS Reloaded, which looks specifically at this question. So what ETSs will look like in a net zero scenario and on the way to a net zero scenario. So if you want to dig deeper into this aspect, there's the webinar recording available on our website, as well as the full report looking at possible future trajectories for emission trading systems. Last but not least, it's also worth noting that even though we are coming out from a period of growth and really positive momentum behind the implementation of emission trading systems, we are conscious that challenges are looming on the horizon, and the next few years will be defining for understanding what role ETSs will play in the next 10, 20, and more years. And we obviously live at a time when there are big geopolitical and economic uncertainties that can pose some risk to ETS stability and public support for emission trading systems, narrowly speaking, but that are casting some doubts and shadows around the broader and bigger picture around decarbonization, around Paris commitments and whatnot. So we are at the time of uncertainty, of fast-paced changes, and again, seeing how ETSs and ETS regulators are positioning in this discussion will be quite interesting to understand what ETSs will evolve next and what the future might bring. What we know is that a lot of attention will need to be given to ensuring that these tools remain supported and that there is a public acceptance for emission trading systems, for carbon pricing more broadly, and for climate policies even more broadly, both in society and in the public, but also in covered entities. And we are seeing how these elements, so the need to maintain competitiveness on one hand, but also maintain public support for carbon pricing and climate action, is increasingly at the core of system design. This has obviously to do with the way that revenues are used in emission trading systems, for example. But it is a much broader discussion that will take the center stage in many jurisdictions in the months to come. So definitely one that we should watch out for and closely follow. With that, those were just some general trends and remarks that we wanted to tease out. We would encourage you to dig into the report to see what you make of it and what your impressions and your considerations are. We will now offer a more detailed look to some of the specific developments and the specific elements that are characterizing emission trading systems at the moment. And for that, we will go to Irina first and to Victor later. Irina, the floor is yours.
Yeah, thank you, Stefano. It's a great pleasure to be here today and present some of the highlights from this year's status report. And yeah, I will start by showing you some of the key figures. Let's begin maybe with coverage. There are currently 38 emissions trading systems in force worldwide, including, as Stefano already mentioned, 2 newcomers this year. And these are the systems in states of Oregon and Colorado. Cumulatively, they now cover over 10 gigatons of CO2 emissions, and the overall share of global emissions covered by ETS is now slightly increased to 19%. Now, looking down at revenues, in 2024, the systems in place raised over $70 billion in revenue, which is slightly less than previous year to be specific, and we will elaborate a little bit more on some reasons behind that later on in this presentation as well. But still, this takes the total ETS revenue to $373 billion cumulatively starting from 2007 when the first auctioning has taken place. In terms of development progress, as Stefano mentioned, there are currently many systems at the different stages of development, and more specific, 11 systems that are currently being developed and 9 that are being in the different stages of consideration, predominantly into Southeast Asia and Latin America. And we will dive deeper a little bit on those concrete examples later in this presentation as well. And finally, nearly 1/3 of world population is already living in regions that are covered by an ETS, and these jurisdictions with an ETS in place are now represent about 58% of the global GDP. Moving on to the next slide, here we can explore our ETS map, which provides a snapshot of the current status with ETS developments worldwide. And let me walk you through some of the most exciting developments that happened in the last year, starting from Americas. Well, this is the region where we witnessed quite some movements. In the last year, the 2 new systems that came online last year are both in this region, in Oregon and Colorado. In Colorado, ETS regulation came into force in 2024, and the trading is set to start in mid-2025. In Oregon, the government reinstated its climate protection program after it has been invalidated in the previous year. And this program now sets enforceable declining emission caps on fossil fuel use in the wide range of sectors, including residential, buildings, and transport, as well as for the emissions intensive industries. Now, further good news came also from Washington State, where a cap and invest program marked a successful completion of its first compliance cycle. and where the public vote in November last year decisively rejected an initiative to repeal the legislation underpinning the program. California and Quebec are both about to start the rulemaking process for the future design of both systems, and we of course look forward to hear more from Mark and Jean-Yves later in this webinar today. In Canada, a draft regulation was published in November 2024 to establish a new federal cap and trade system for upstream oil, gas, and LNG production. But of course, we understand that any further developments on carbon pricing in Canada will now depend on the outcome of the upcoming elections. Moving down to South America, here it is the Brazil that made major headlines, with the law establishing the Brazilian greenhouse gas emissions trading system approved in November 2024. The law basically lays the ground for the governance framework and the legal foundations for the compliance obligations, with some key design elements such as scope, cap, and allocation to be determined in the coming years. Dominican Republic is featured in our report for the first time this year, as the government is advancing its work on the pilot ETS, building on the ETS roadmap and the national simulation exercise developed in the previous periods. Moving on to the European continent, now the EU ETS continues to be the largest system in force in terms of trading value and volume. As we all know, following the 2023 reform, some important changes to the system's ambition and scope took place in 2024, including a downwards adjustment to the cap. The scope of the ETS has extended to emissions from maritime transport and also from most flights to and from the EU's outmost regions. Also, a new separate ETS for buildings and road transport, also known as EU ETS 2, is underway, with full transposition into the member states' law to be finalized soon following the 2024 deadline. Related to this, in Germany in early 2025, the government adopted a transition law confirming the phase out by the end of 2026 of its national ETS for heating and transport fuels, as it will transit into the EU ETS 2 or transform into the EU ETS 2. The UK is in the process of consulting stakeholders on their scope expansion and also further implements some reforms to align the system with the net zero 2050 target. And of course, I will also leave it to Hannah to provide us with more details on that process. In Ukraine, the preparation of the regulatory framework for its national ETS also has seen some good progress. In December last year, the Ukrainian parliament approved the law on basic principles of climate policy, which mandates an ETS. And in January this year, the mandatory reporting under the MRV system has been reintroduced following its suspension in 2022 due to the Russian war of aggression against the country. And finally, Turkey is preparing to launch its ETS with a long-awaited pilot phase planned to start in 2026. The government completed technical analysis for the draft climate law in 2024, and now we expect the final parliamentary adoption sometime in the first half of 2025. Last but not least, let's turn to Asia Pacific. It has been an eventful year for the Chinese ETS. In 2024, a new regulation establishing a robust legal foundation for its national system was approved, and the government is going ahead with extending the system to the cement, steel, and aluminum industries. The covered entities in these sectors are expected to face the compliance obligation already for their 2024 emissions. In India, the government adopted detailed regulations for the compliance mechanism that will run under the existing carbon credit trading scheme. This mechanism will take a form of an intensity-based baseline and credit system with the mandatory emissions intensity targets set for each regulated entity each year. Finally, two last highlights. Japan is actively working on transitioning from the voluntary ETS it currently has in place to a mandatory one next year. And the Vietnam is going to launch the pilot ETS for high emitting sectors already this year, expected in June this year. Yes, so with this, I will pass the floor now to Victor to walk us through more status report highlights.
Thank you very much, Irina. In the next slide, we will see the global expansion of emissions coverage by ETSs. You will see that in the last few years, several systems have come online. In 2025, we expect that the emissions coverage of ETSs will remain stable, as Irina was saying, at around 19% of global emissions. Here, it's interesting perhaps to note that typically the growth in absolute emissions coverage that is due to the introduction of new systems is offset by the decrease in emissions in the ETS cap. So we could say perhaps that the ETSs in that regard are victims of their own success. We also expect that in the future there will be significant increases in global coverage with the introduction of new systems in India, in Turkey and Brazil, as Irina was mentioning, but also due to the expansion in scope on the China national ETS and the EU ETS to when it starts, also some elements that Irina had mentioned. And we also wanted to remind you that you can always stay up to date on the latest news and developments on ETS through the ICAP website and upcoming editions of the status report. The next slide will show us sectoral coverage in systems currently in place. If you have been following the status report for the past few years, you will notice that we have now expanded our categorization of sectoral coverage to now include mining and extractives, which used to be categorized within industry, and also to fuel use in agriculture and or forestry. This expansion has been done in coordination with our friends at the World Bank to improve the alignment between our status report, their state and trends, and also mainly to improve the alignment with IPCC reporting categories. And as systems change their scope, expand their scope over time, and more systems come online, we expect to see more of these nice little tiles colored in the future. Something that may also be interesting to note here is that the same jurisdictions may cover different sectors with different instruments, in this case, with different emission trading systems. If we think, for example, Germany, Austria with the EU ETS, but also if we think about the EU ETS 2 or several states in the northeast of the United States that are considering the role that emissions trading could play in their policy mix. The next slide will show us allowance prices over time. The panel on the left shows us that for the past half decade, we had seen allowance price increases, significant increases for most systems. And we can also see that in 2023, the prices for allowances in some systems went down, whereas for others went up. The panel to the right shows us the development in 2024, and we can see that allowance prices have remained mostly stable. The next slide will show us an infographic that's a sister to this one, which is on the collection of revenues from the sale of allowances in different systems. One interesting trend to note here is that after several years of record increases, the revenues that were collected in 2024 have decreased from the ones that were collected in 2023. This is not the first time in history that this happens. The last time that this happened was in 2016. The total drop that we see here is of around $5.7 billion. The EU ETS alone accounts for around $5 billion. So without the EU ETS, the values in different systems would mostly remain, or on average would remain stable. We can also mention that there have been some systems in which revenue collection increased, such as Germany, Austria, Regi, and Korea, and in some others where it decreased, such as the UK, Washington, California, and Alberta. Another important thing to note here is that for most systems, for most ETSs, revenue is a function of the number of allowances that are sold in auctions at the price at which they are sold. And mostly because of decreasing caps in ETSs, many ETSs tend to auction less and less allowances every year. For example, the UK in 2023 sold 79 million allowances. In 2024, sold 69 million allowances. Germany in 2023 sold 358 million allowances from different vintages. In 2024, sold 294 million allowances. And in the future, it might be interesting to see what driver will prevail between the decrease in auctioned quantities or the potential or expected increase in prices. Finally, from my side, the next slide, this one, shows, we would like to introduce you to this new infographic, which shows the potential or the theoretical demand for offset credits in ETSs according to current system design. So right here, we're not looking at actual demand for carbon credits, but rather the potential. The offset credits are increasingly becoming a key feature of ETSs, particularly in newly implemented systems. Out of the 38 ETSs that Irina and Stefano were talking about, 24 allow domestic offset credits for compliance, and only South Korea accepts international credits for compliance. And whereas domestic credits have currently been the focus on ETS design, we can expect or speculate that progress with Article 6 implementation might encourage the demand for international credits in the future. It is also interesting to note that compliance-driven demand for offset credits could soar in the coming years, yet it might be constrained by generous free allocations and low allowance prices. And it's also worth mentioning that usually the offset rules and the domestic crediting standards can be a bit difficult to navigate for compliance entities. If you would like to know a bit more about the numbers that are being shown here, we can tell you that the three largest potential markets are China with 264 megatons of CO2 equivalent, also Indonesia with 257 megatons of CO2 equivalent, and Kazakhstan with 167 megatons of CO2 equivalent. The aggregate theoretical demand that we have here is of around 880 megatons of CO2 equivalent. Something that I would like to invite you to check on the fact sheets of the specific systems, because there you may be able to find more information on actual offset use. If we take, for example, the case of California, it might not make a lot of sense to look at year-on-year use of offset credits because of how the compliance cycle works for them. And we can also, if you look at the fact sheet in Kazakhstan, you will also see that no offsets were actually used, surrendered for compliance in 2023. And finally, it's worth mentioning that high demand systems such as China and Indonesia are still in the process of setting up their crediting rules and mechanisms. So we're looking forward to following up on these developments in the future. With that, we can move to the next slide and back to Stefano.
Thanks, Victor, and thank you, Irina, for the great overview of some of the key trends in the ETS space. A couple of things that I wanted to add on my side. So first of all, an encouragement to all of you that are here with us today to do have a look at our website. I mean, you can find the ETS status report in there. Obviously, the same information that you will find it in the ETS status report fact sheet is also featured in the interactive ETS map that we have on the website. Some of the key information that, for example, Victor presented on prices and revenues is also available in the allowance price explorer tool on our website. And in general, you will find all information you may possibly want on the design and implementation of emission trading systems globally. If we go on to the next slide, a second point that I wanted to make is that we will move out now onto the panel discussion segment of the webinar. But in the meantime, and as we go through the panel discussion, do not hesitate to send comments and questions in writing, making use of the Q&A function of the webinar. I'll be coming to those right after the first round of panel discussion. But if you can, if you put them in the meantime, we'll get to prioritize them. And obviously, feel free to ask or raise anything that you want, both about the report itself, about the key trends and developments that we just described, but also obviously feel free to raise system-specific questions to our panelists if you're keen to find out more from them directly. With that, we will now move on to the panel discussion segment of the event. And if we go on to the next slide, I will invite the panelists to come on the virtual stage and turn on their cameras. I will quickly introduce them and then we'll dive right in. So with us today, we have two colleagues from DG Klima at the European Commission, Julia Ziemann, who works on the domestic ETS implementation, and Lukas Wisek, who is part of the newly established task force on carbon pricing and market diplomacy at the European Commission. And I will be asking them to comment on what we just talked about from the respective vantage points. We are also joined by Hannah Lewis at the Department for Energy Security and Net Zero in the UK, who is also responsible for the implementation of the UK ETS. We have with us also Mark Cipolla from the California Air Resources Board, and Mark is managing the California Cap and Trade program. We also have with us today Clenise Favero from the Ministry of Environment and Climate Change in Brazil, one of the key people involved in the development of the Brazilian emission trading system. And last but not least, we also have Joe Pryor from the Climate Finance and Economics Unit at the World Bank. Joe is one of the key architects of the State and Trends report at the World Bank, and a key partner for ICAP across many different areas of work. I will ask each one of you to do two main things. I'm curious to see if any of you has comments, reactions, and reflections on what we just presented. So we'll be asking you if anything out of the latest trends and developments in the ETS space has caught your attention in particular, if there's anything that you want to highlight. But then I will also be asking you to tell us a bit more about your work, about your systems, and about the key developments that your jurisdictions have witnessed over the last few months, and obviously also what we might expect next. Again, we'll start from the colleagues from the European Commission, and I will be asking first Lukas to comment on the global ETS developments, also from the point of view of the task force, right? Because the task force is engaging with many of these countries that are actively working on the development of emission trading systems. So I would be curious to hear what you make of global ETS developments and also what you're learning through your engagements. And then we'll go to Julia for another note more focused on the EU ETS and its implementation. But Lucas, let's start with you.
Thanks very much, and good morning, good afternoon, everyone. It's a great pleasure to be here, and my sincere congratulations to everyone who has worked on the report. I think Stefano, you're being very modest about the importance and the quality of the report. So really, I'm very impressed, and I'm sure that this is going to be, as always, one of the beacons of wisdom for until the new one comes up next year. I will do both things that you have asked me to do. So first of all, I want to introduce very briefly the task force. The task force was set up last year on paper on 1st of April. We more or less operational since September last year. It was our birthday last week of 1 year of the task force. What we do is that we are a diplomatic team of about 10 people, and we engage closely with governments around the world in countries who are progressing or have progressed or have very concrete plans on progressing on carbon pricing. And I also want to be clear that this goes beyond ETS. We also work on with countries on Article 6, also on high integrity carbon credits, but also and mainly, and that's our priority, on domestic compliance markets, obviously including ETS and carbon taxes. We try to work in complementarity with other stakeholders, such as many of those who have been already named today, including ICAP, of course, and we work on a government-to-government basis, providing the honest advice on how to proceed in the national context. Now, enough about the task force. Now on the report, and also a bit of a. I mean, I feel I'm going to kind of only summarize what has already been said because it's all in the report. But I'll try to add a little bit of my own experience, mainly from Latin America. So what has already been said, and I think that's really good news, is that carbon pricing is expanding, and it's expanding in terms of quantity, and I think probably even more importantly, it's expanding in quality. So more sectors are being included. The expansion towards having solid carbon pricing and solid ETS is clearly there. I think that's a trend, I'll get to that. I'll get to that in a minute. And since we are in a regulatory mode, I think it's also excellent news that Brazil adopted their ETS bill in December last year. We clearly see progress in many other countries on ETS. I will name Mexico as a very good example, and those are countries, but not only those, that we work very closely with. Second point, which I think is also very positive, that I want to make, is that carbon pricing is becoming a versatile instrument. And I know that we are mainly in the ETS domain here, but it's very positive to see countries like Suriname, with whom we are working closely as well on developing carbon pricing in a form of carbon tax. So my point here is that ETS has gone, or carbon pricing, if you like, has gone from, let's say, a tool that is for a few who are industrialized and who need to reduce greenhouse gas emissions, mainly from industry. It's become a tool which is much more versatile and which also has very close ties with the economic development of the country where it is implemented, and that's, I think, really positive. The third point that I want to make is also, and it's also already been said as well, is that the role of offsets, I think, is changing. I think the days of carbon credits being a bit out of control of the compliance market are numbered in many countries, and what we see is really the trend of trying to keep the high focus on high integrity carbon credits and to keep them for domestic purpose and for the compliance system. Now, it's not all completely, done and dusted. I think there are a few points which still need to be brought forward. So first of all, and I think this is the main point, having a carbon pricing in the country is not just about ticking a box and being on a map in the annual report. It has to be a system that is effective, that actually reduces greenhouse gas emissions. And I think that is sometimes not entirely clear when it is implemented. Sometimes carbon pricing coexists with subsidies for fossil fuels, and I think that these controversies have to be reconciled in those countries that are concerned. Second point that I want to make is that carbon pricing is a fantastic tool. I mean, look at the EU; it has even set up its own task force for carbon pricing, but it cannot exist in isolation from other policies in the country. It cannot exist in isolation from the rest of the NDC, and I think this is absolutely essential. It needs to be clear what role carbon pricing plays in delivering NDC, and that also brings me to having a good approach, solid approach to setting the cap, and really understanding what role it plays in the economic development. And my final point is very much related to this. And it is a bit of a repetition of what I said. Carbon pricing is an important tool, also not just for reducing greenhouse gas emissions, also for revenues. But it is just one. It is just one of the tools, and it is not going to be as effective if it is not supported by flanking measures and by a comprehensive toolkit of policies, of economic policies, of taxation policies, but also of social policies supporting just transition. I think I've covered all my points. Thank you very much, and I remain available for Q&A later on.
Thank you, Lucas. This was an excellent overview and a bit of a distilling of the key trends. So thank you so much for that bird's eye perspective on what is going on, but also on the underlying challenging and key issues that need to be tackled. With that, I would like to go to Julia next, and I would like to ask you to complement what Lucas just said with a bit more of an inward-looking perspective on what is happening in Europe, what is happening in the EU ETS, and what we might expect to see next.
Sure. Thank you very much, Stefano, and thank you for the invitation. It's always a pleasure to be here, and in fact, we were so keen that you got two of us. But I can only echo Lukasz's congratulations to you and the whole team, because I think it's suffice to say that the report is becoming an instant staple in my work, in the task force's work, and pretty much in anyone working on climate policy and carbon pricing. To recap where the EU ETS stands against the overview that the report includes, it is one of the 38 systems in place or in development, but accounts for some 10% of the emissions that those systems cover, and indeed for more than half of the revenue generated in 2024. This doesn't include ETS2, the new emissions trading system for emissions from fuels used in road transport and buildings, that will start in 2027-28. 2028. And with the ETS2 operational, the EU would cover about 75% of its emissions with carbon pricing, which I think would put us just ahead of China after the latest scope expansion. The EU ETS is also delivering in terms of the emissions reductions, and the webinar is very timely because we have the 2024 emissions data just in, which shows a 5% reduction in emissions overall compared to 2023, which after a historic annual reduction of 16% last year, I think it's a good incremental progress. However, it's still, I think the data still shows where the challenges remain. The main driver behind the decarbonization has been the power sector, with good progress in the deployment of renewables, with a gradual reduction in coal and natural gas-based power. At the same time, the emissions of the industry have remained relatively stable, and they largely track output, showing little energy efficiency improvements or efficiency improvements in general. And in aviation, we see a continued increase in emissions, albeit I should preface that at least part of it is attributed to the fact that we expanded the coverage of ETS for aviation by about 7%, counting in non-domestic flights to the outermost regions, which in human language means flights from France to Canary Islands, for example. But I suppose the question is, where does this leave us? And overall, the ETS emissions are now around 50% below the 2005 levels, which leaves about 12.5% for us to go until 2030. This is still a way to go, even with the great progress made. And I think especially so because of that sort of one sector driving the decarbonization, and the fact that that achieving more effort from the others requires a lot more effort, and I think a further reaching transformation, perhaps. Also, because the overall emissions so far, the emissions reductions are below the linear reduction factor, so the pace at which we reduce the cap in the EU ETS. These years we should be doing around 4.4%, and we're doing around 3%. So it's clear that we need other sectors to really chip in. And this is already getting some attention in the EU. 2024 was an important year. The European Parliament and the European Commission have both started their new mandates, and agenda-wise, the focus is on industrialization and affordability, competitiveness, but also decarbonization. And all of these elements are brought together in the Clean Industrial Deal, in the context of which the EU ETS, I think, is a really potent instrument, because it can provide a clear signal for the investments in the energy and industrial transformation. The design with a long-term overview gives certainty, or informs the investment certainty, and of course there's a source. It's a source of funding for the investments to be made. But we also need complementary policies that the Clean Industrial Deal will spearhead: lead markets for green products, financial support in a more targeted way, such as the carbon contracts for difference, effective state aid framework, or even safeguards against the carbon leakage. I think, there's probably a link between the increased interest in carbon pricing and the announcement of the CBAM, not only by the EU. And I think it's worth to mention that we aren't starting from scratch, because the EU ETS already, just as one policy, has elements to support industrial transformation. Just last year, we've had the largest allocation from the Innovation Fund made to over 85 projects in, I think, clean energy intensive industries, renewable energy, energy storage, carbon management, and so on. We also started implementing the rules for support for aviation, for sustainable alternative fuels. So this is, I think, very much what has been at the core of the ETS design, but will now be matched also by other complementary policies. And where we're looking next, 2026, and the review of the EU ETS to basically ensure that as this, the system develops and continues to support that economic, not just energy transformation. Topics on the table include market balance and liquidity, ETS for aviation, integration of carbon removals in the ETS, tackling emissions from waste management, carbon capture and use accounting, and many others. I think in essence, we want to give the sectors that are covered by the system the tools to really realize their transformation. And of course, all that is taking place in the context of an upcoming proposal for the EU's 2040 climate target. I'll end here, and maybe I'll just say that this year the EU ETS celebrates its 20th birthday. Hopefully, we are past the complicated teenage phase, and if you cast your mind to when you were 20, I think you can recall that you had some important decisions to be made and some important moments ahead. And I think this is very much true for what's next in the EU ETS, and you'll be able to read that in the next ICAP report.
Thank you, Julia, and thank you for the excellent overview. Let's now continue the world tour of ETSs, but let's stay on the European continent for one more update. I would like to go to Hannah Lewis next and ask you again if you have an impression on the overall trends and developments, but also please give us an update on what is the latest on the UK ETS. Thank you, Hannah.
Thank you, Stefano, and hi, everyone. Again, it's a real pleasure to be here. And also, firstly, to say huge thank you and congratulations to ICAP. As others have said, the status report is a huge achievement, and it really, really is a very much valued resource for us as policymakers. And it is something that we do draw on a regular basis. So well done, and thank you very much. So there are 3 areas I just wanted to comment on very briefly in terms of reflections on the status report, and then I will give a bit of an update and say a little bit more about what we're doing in the UK at the moment. So firstly, as others have said, I think very much expansion and innovation is a key theme. It is really great to see the continued uptake and development of ETSs worldwide. With 38 ETSs now in operation, many more in development. And it is really encouraging to see that the emerging economies are very much driving the next wave of system development. And also, as others have noted, that jurisdictions are increasingly thinking about what form of an ETS works for them in different domestic contexts, and increasingly adopting non-standard sort of cap and trade schemes by, for example, setting up hybrid schemes where you have an ETS working in parallel with a tax, for example. It is really important to maintain the global uptake in carbon pricing. And I do think more innovation in scheme design does really help show how carbon pricing can be very flexible and adaptable as a tool that can work in many different contexts. So that is great to see. And the second area, just to highlight, as others have said, very much exciting to see how for many jurisdictions, including in the UK, emissions trading is very much at the heart of goals to deliver on net zero emissions. I think, as the report says, this, of course, does raise some challenging design questions, but it also really strengthens our collective ambition, and it actually really broadens our view in terms of what is the long-term potential for emissions trading, including through discussion of integration of removal credits and also prospects for things such as negative emissions. So integration of greenhouse gas removals is something we are actively looking at in the UK, and I'll say a little bit more about that later on. And also interesting to see the increasing interactions between compliance and voluntary markets, the use of offsets becoming an increasing feature, and also very much as well, very promising to see the expansion of ETS coverage to new sectors. And this is an area where in the UK, we are very, very keen to learn from others. It is something we are interested to understand more about. And the final thing I wanted just to comment on is the reflections regarding economic and geopolitical uncertainties. And of course, emissions trading by its nature is intended to provide a sort of stable long-term signal for decarbonisation. So uncertainty and instability is very much a huge challenge, especially where that can impact confidence in schemes and support. So as policymakers, it is really important to think about how do we provide that clarity and long-term direction. This is something that we are thinking about in the UK, and how you provide that long-term pathway for the scheme. So overall, really, really pleased to see another edition of the status report, and huge thank you. I think international engagement and collaboration is something that we do prioritise in the UK on emissions trading, and will continue to do more of, hopefully, in the coming years. Those were my main reflections on the report. I can move on now and just provide a little bit more specific information on the UK ETS. So just as a quick bit of scene setting, so the UK ETS has now been in operation for 4 years. It was introduced in 2021, following the UK's exit from the EU ETS. And it is run by what we call the UK ETS Authority. So this is a governing body that consists of the governments of UK and also of Scotland, Wales and Northern Ireland. The UK scheme currently covers emissions from energy intensive industries, power sector and aviation, and this represents around a quarter of the UK's emissions. In terms of the last year, so an awful lot has happened over the last year, and we continue to be going through quite a period of quite active policy development and reform. There has been a lot going on, but I will focus on 3 areas where there have been developments. So net zero alignment, scope expansion, and then the approach to mitigating carbon leakage risk. So firstly, on net zero, in 2019, the UK legislated for a target of achieving zero emissions by 2050. We subsequently published a net zero strategy setting out how this would be achieved across different sectors of the economy. And our aim is very much that the UK ETS will play an important role in delivering this. As others have said, it obviously won't do it alone. It needs to be a combination of different policies, and we need to think about different sectoral effort shares, but it is one important lever. And at the beginning of last year, at the beginning of 2024, the UK ETS cap was aligned with a net zero trajectory. So overall, this results in a 30% reduction in the previously legislated cap. So the scale of reduction over the next 6 to 7 years, it is ambitious, and the annual cap will reduce quite considerably from 156 million allowances in 2021 to around 50 million by 2030. So the intention is to set a really clear signal for businesses to start planning for this. Also in relation to net zero, in 2023, we announced the intention to include engineered greenhouse gas removals in the UK ETS. And last year, we consulted on exactly how we plan to do that. So the inclusion of what we call GGRs in the UK, greenhouse gas removals, is intended to incentivise investment and provide a source of demand for these technologies. And it also provides that longer term role for the UK ETS delivering net zero. So we've now consulted on how we might go about integrating removal technologies, looking at cap policy options, allowance designs for GGR credits, and permanence of carbon storage and pathways to integration. Moving on to the next area where there has been a lot of development, scope expansion. So over the last year, we have announced a commitment to extend the UK ETS to include energy from waste and waste incineration from 2028, but with a period of monitoring, reporting and verification from 2026, and also to extend the scheme to domestic maritime emissions from 2026. And we have now consulted on the details of how we might do that, to set out the details of implementation in a bit more detail. The final area I wanted to talk about was carbon leakage, because over the last couple of years, we have been conducting quite an extensive review into free allocation policy. So these are allowances that we give out for free to industrial sectors. We've already set aside the quantity of allowances that will be available to give out for free. And now we are looking at the detailed rules for how we will distribute these allowances. So who will be eligible for them and in what way. So looking at how do we measure carbon leakage risk in the UK, setting benchmarks for different sectors, and also considering things such as availability of decarbonisation technologies. In the UK separately, we also have announced that we will be introducing a UK carbon border adjustment mechanism from 2027 to a number of sectors. So we are looking at how UK ETS free allocation policy should interact with the introduction of a UK CBAM, including one approach which could be adjusting free allowances for sectors that are covered by CBAM. And the overarching aim is to make sure that carbon leakage risk continues to be effectively mitigated, and that we have a joined up approach to a holistic approach to assessing this and to tackling it. And then the final thing to mention is that we have published a long-term pathway for the UK ETS, and at the beginning of this year consulted on the continuation of the scheme post 2030. And so hopefully that will give our participants a bit more detail and also commitment that the scheme will continue in the long run and for many years to come. So I'm going to conclude there. An awful lot happening in the UK, and very happy to take any questions as well.
Thank you for the great overview, Hannah. And we'll cross the pond now, and I wanted to go to Mark next, as you are also charting the course for the future of the California cap and trade system. Similar question to you. So let us know if there's anything that you want to remark on out of the the main findings of the report, and please give us a quick update on what is happening in California and what might be coming next. Thank you.
First, let me just add to the chorus of voices from around the globe. Congratulations on the release of the report, and thank you for the another high quality and important contribution. It is something we really rely on, and so many thanks for that. Highlight, the continued momentum expansion of carbon pricing is really great news. I'm sure I'm not alone in sometimes, focusing on the details of my life and of my daily work or of my own little program, and sometimes experiencing frustration and discouragement at the challenges we're facing, the headwinds, loss of funding, rollbacks. But it's really nice to take this day and this moment to step back and look at the bigger picture, see the long-term trend towards increasing action. That's really encouraging to see that expansion of carbon pricing around the globe. And I just want to note that that continued expansion isn't a given. We see across history in many realms, progress is followed by setbacks, rollbacks. And so to maintain this kind of positive trend, I think we really need to stay focused on our commitment. And that includes a commitment not only to kind of developing programs, sound implementation, but also to partnerships and to knowledge sharing, like through these platforms that you provide at ICAP. So I think that's like one really important thing that I'm seeing here is just this network, and supporting each other is going to be really important going forward. The more examples of successful programs designed flexibly for local circumstances, the better. So to the extent that the mature programs can act as models for success and support developing programs where needed so that they can successfully install programs and implement them, I think that's kind of one of the most important things for us as a community going forward. looking at the design aspects related to the offset credits and kind of net zero design of cap and trade. I think there's some really interesting elements that maybe we can discuss later. I'll note that in terms of the California cap and trade program, it's an economy-wide program. It's a mature program. It's been around since 2013, covers 80% of our emissions. We've got some long-term climate goals, reducing emissions by 40% from 1990 levels at 2030, 85% below 1990 levels by 2045, carbon neutrality in 2045. We've got a whole suite of programs, and due to the flexibility of emissions trading, and the ability to coexist with complementary measures, we use the cap and trade program as a centerpiece and key measure for our climate work, but it's really part of a whole suite of policies. And the expanding reach of carbon pricing around the globe is offering additional opportunities for us to coordinate, and it's expanding opportunities for kind of harvesting low-cost emission reductions around the globe. So, specifically in California, we're entering our 13th year. We're linked with the emissions trading system in Quebec. So we're providing a model of kind of subnational coordination, of international coordination. And we're happy to kind of support that kind of activity with others. I'm noting California cap and trade, it's flexible and it's robust. It's endured times of political uncertainty that we had in 2016 and 2017. We had the pandemic in 2020. We're in some times of uncertainty politically now. And the program has proven adaptable and flexible and continued on. Entities have been able to understand the program and comply with it. And, altogether, the design features, the implementation practices that we use have proven to be an effective and understandable and resilient approach to cost effectively reducing emissions. So, we are looking, as you noted, at updates to the program. The big headline really is making the program more stringent. We're also looking at some of the cost containment features of the program. In that context, we're adapting to local changes in electricity markets. We're exploring approaches to further decarbonizing industrial sources and supporting, supporting the prevention of emissions leakage. Happy to get into those a little in more detail. But as we do contemplate those types of changes, really it's in the context of supporting a program that's proven efficient, and we're tweaking the program as a model of successful emission reductions. And as we do that, we continue to explore and support partnerships with other jurisdictions to kind of increase the impact of carbon pricing around the globe. And I'll just leave it there.
Thank you, Mark. And I think we'll come back to some of the points that you mentioned in a second, because I'm seeing, for example, interest about inclusion of removals in ETS, and California is obviously one of the jurisdictions that have experience with that. Before that, I wanted to quickly go to Clenise, asking you for a quick update on the latest in Brazil. And obviously, Brazil is one of those jurisdictions that made big headlines over the last few months. It is actively and really quickly working on the development of a new emission trading systems, and we would like to ask you to provide a quick update on what is the latest in Brazil.
Okay, hi everyone. Good afternoon, good evening. And first, I'd like to say congratulations on ICAP to the report, because it's a very important document for us to think about carbon markets in our homes, in our countries. And thank you for inviting me to share a little bit of what we are thinking of doing here in our ETS in Brazil. And I'm so happy to see many dear people today here. And while I was preparing this talk, this presentation, I went through my notes from the ICAP summer school in Florence in 2022. And it was a totally different political moment in Brazil back then, before the elections that will take place in a few months. And at that time, I wrote, I hope that in the new government, we can rescue the final report from the PMR and implement a solid ETS in Brazil. And so today I'm very happy to tell you that this dream is coming true. And we had our law mid-December last year. So we are at the first moments of the implementation of our ETS. And our first step is to set the management body. We are thinking about an agency, but it will need another law, and it will take some time in the Congress. So for now, we are planning a special secretariat in the structure of the Ministry of Finance for these 2 first years of implementation. And then after that, we can set everything about CAP and entities, because for now, for example, only agriculture is excluded of our ETS, and all the other sectors are in. So the first thing we have to do is to set this management body to start regulate the market for about 5 years of implementation. So we are just at the first steps, and these with the support of ICAP and Adelphi, for example, we are starting to design it, to plan it. So I hope next year we'll have a lot of new information to share. Thank you.
Thank you for the great update, Clenis, and it's good to know that there is a lot of work going into the development of the ETS in Brazil. It is a space that we are all watching quite closely, and as you also pointed out, ICAP, the World Bank, the European Commission Task Force, we are all here to help with the process. So don't hesitate to get in touch if you need help on ETS development. Remaining on this note, I wanted to go to Joe next, and Joe and the broader team at the World Bank are a key partner for ICAP on a number of different fronts. I mean, across knowledge sharing. I mean, we work really closely on the development of the respective reports, but also on capacity building. We've been doing capacity building activities for quite some time and across different areas. So wanted to get your perspective, Joe, on both things. I mean, first of all, what you make of the broader trends in the ETS space, but also more broadly in the carbon pricing space that the World Bank tracks in the state and trends of the carbon pricing report, but also what's your experience out of the engagement with developing emission trading systems and up and coming systems through the capacity building activities and the implementation of support that the PMI provides. With that, Joe, over to you.
Thanks, Stefano. And I guess there's good news and bad news. Maybe the bad news for me is that everyone has said all the clever things already, so there's not much more that I can add to that. But the good news is it means I can be really short, so I'll be quite brief. But I wanted to maybe, rather than say anything new, maybe just structure slightly on the things that have been said, the things that resonate with me, and really around the role of carbon pricing generally, and what that means going forward. And the first thing I wanted to talk about was flexibility and scalability of ETSs and carbon pricing generally. And I won't talk about, there's lots of movements here and really good examples of how this has happened in practice, but I think this is really important for new governments considering carbon pricing to recognize the the potential for feasible implementation options. You don't have to implement a whole of economy carbon price at a very high price level from the beginning, and then there is a way to adapt and to evolve that into a more highly functioning system. The second thing I wanted to talk about or highlight is revenue generation. And there's been a lot of talk about this, and the reason why I think it's an important metric is because there are a lot of different elements that underpin it, and we've talked about a lot of those. So obviously, price and coverage influence revenue generation significantly. We also touched on today the free allocation, and then the other element I wanted to talk about is allowing offsets into a system, because all of these also affect revenue generation, and then you've got competing fiscal priorities, competing policy objectives, and this is a huge challenge for governments as they're trying to balance all of these competing priorities. And so I just wanted to put that on the table, and that sort of leads me to my last point on the political economy and sort of trying to balance all of these things. And I think Mark mentioned it, like, in order for it to be successful, a carbon price needs to be enduring. And coming from Australia, I know this. We had quite a well-designed system for a couple of years, and now a sort of a baseline and credit system. But not only is it important in terms of like a policy framework, but providing that long-term price incentive, I think, is really important. One other sort of point as part of all of this in the political economy, and something that's sort of resonates a lot with our client countries, is that carbon pricing is a very important climate mitigation tool, yes, but it doesn't stop there. That it can provide a lot of other broader benefits, and particularly as a fiscal tool, it can provide revenue generation that is less distortionary than traditional forms of revenue, such as labor and capital taxes. And I think that's a really important point that it resonates with our client countries, which tend to be those countries that have not yet implemented a direct carbon price. And so that's something that is really front of mind for us as to how can these systems be designed to achieve not just climate objectives, but broader economic, fiscal, and social objectives. And then just to sort of tie this all together, the work that ICAP is doing, and we really appreciate the collaboration, it's worked very well. But this work and this status report that you produce is critical in terms of informing those countries about to embark on a carbon pricing journey of what other countries have done, what has worked, and to be able to learn and build on those systems. So I'll end there, and thanks for letting me join.
Thank you, Joe. Thanks for both your nice words and remarks, and also for the great collaboration that we have across many different areas of work. And obviously, thanks also for the really interesting reflections. I agree, across the board, and it would be interesting to discuss this further. We do have a couple of questions that came up in the meantime that I would like to get to. I mean, one is for Mark, asking to elaborate a bit more on the linkage with Quebec and what the optics are for collaborations with other jurisdictions. And we also have a few questions on this topic of integration of removals in emission trading systems. I would go to Hannah maybe first, knowing that the UK has done quite a lot of thinking on that, but I would let it also open to for others to come in. The only caveat is that we have a couple of minutes before the end of the webinar, so I will ask you to be really quick. Mark first.
Just focusing on the collaboration with Quebec, I'll note that work started even before we had programs. We had worked on design elements for programs that we each then independently established and set up and began implementing. Then we went through the process of linking. So we've been really collaborating close to 2 decades now at this point. And so I just note that we have a model that could be used to as a template for others, but we have very close interactions and collaboration every week across aspects of our program. We've got common elements for administrative and technical services that help us, implement the program cost effectively. We have a lot of really good conversations about designing and adapting the program. And I think these kind of cross-jurisdictional discussions that we do have with them, they come with some administrative delays sometimes, but they really make the programs together strong, robust, and really thought out from many different angles. So for brevity, I'll leave it there.
Thank you, Mark. Hannah, 30 seconds on removals in the UK ETS. Is that doable?
Yes, very, very quickly. So I think the questions are looking at the process for integrating removals and also thinking about things such as price impacts and how you might mitigate that, which are all really, really good questions and issues that we have been grappling with. I think fundamentally, any integration of removals, it needs to complement it rather than substitute for any emissions abatement fundamentally. When considering bringing them into a compliance market, we also need to think about the existing supply and also any market impacts. So one of the things that we are looking at in the UK is actually bringing removals in. You wouldn't increase the cap, but you'd substitute allowances under the cap for new allowances from removals, whereby maintaining the overall cap and level of emissions as it is. And that would also help to mitigate any potential market impacts. But we do have more details there on our consultation that came out last year, if anyone is interested, because we go into some of the practicalities in a bit of detail. I hope that was helpful as a very quick answer.
Yeah, that was super helpful. Thank you, Hannah. And we are out of time already, so I'm afraid we'll have to close the Q&A here. But if you have any remaining questions, please do send them by email to us. We also have a second webinar tomorrow morning where we will get to hear from a different set of experts and jurisdiction representatives. So you're more than welcome to join that one as well. Before coming to a close, I wanted to say a few thank you mainly. I mean, obviously a big thanks to our panelists and the speakers from the ICAP team. Thank you for making this webinar really, really interesting. The time flew by. I also didn't realize that we were close to the end of it until 10 minutes ago. Thank you for the interesting discussion and for all the insights that you shared with us. Thank you also to the ICAP team and the amazing work that they did on the report. It's always a big effort for us, but it's always really nice to see it finally out and public. And I hope that you all enjoy it. And finally, last but not least, a big thank you to the ICAP members who support the work of ICAP and this report specifically, and to all the policymakers and ETS practitioners that help us verify the information that is in the report. One main beauty of the report is that every single piece of information is verified and double checked with our point of contact in the local government. It is a major effort, and we are grateful for that. But it really is what creates the value of this report and of all the information that is in it. With that, I would encourage you to actually read the report after listening to the webinar. And again, thank you all for joining us. We will do this again tomorrow morning. And just, as a quick consideration, it's quite obvious that there is a lot happening in the ETS space right now. There will be a lot going on in the coming months. It's a space worth watching, and we're looking forward to seeing, what the future brings to the ETS space with you all. Thank you again for joining us. See you tomorrow if you want to join us again, or see you at the next ICAP webinar. Thank you all.